Splash Financial has definitely made a splash in the student loan refinancing market over the last year by offering some of the best rates and best student loan bonuses available. They started out focusing on medical school loan refinancing, but they now have expanded and offer a general student loan refinancing product open to anyone with a bachelor's degree. In this video, we'll review Splash Financial and see why we list them on our best places to refinance student loans guide. Hey everyone, this is Andy Hill with The College Investor, investing and personal finance for millennials. If you're new to the channel and like what you hear, please hit subscribe so you're ready when our next video comes out. Thanks. Who is Splash Financial? Splash Financial launched in 2017 as a direct lender with a strong focus on medical professionals. However, in 2018, Splash began to shift its strategy. At that time, it announced a partnership with Pentagon Federal Credit Union, or PenFed, to help it compete with some of the larger players in the refinancing industry. Since then, Splash has worked hard to develop partnerships with other banks and credit unions. Today, Splash is actually a lender marketplace. In other words, it connects borrowers to lenders rather than servicing loans itself. With this in mind, Splash is now more of a direct competitor with marketplaces like Credible or LendKey than individual lenders like ELFI or First Republic. Let's first discuss how Splash Financial works. Splash Financial offers a general student loan refinancing product that targets all borrowers with a bachelor's degree or higher, and in some cases, an associate's degree in certain healthcare fields. This product is highly competitive with some of the best rates we've seen compared to other top student loan refinancing companies. Splash Financial's partners currently offer loans from $5,000 with no maximum. Here are their current rates. Fixed rates are 3.99% to 8.49% APR, and their variable rates are 2.5% to 8.65% APR, and rates are capped at 10%. The term lengths are 5, 7, 8, 10, 12, 15, and 20 years. Now remember, rates are subject to change without notice. For current rates and fees, check Splash Financial's site, and we'll have that link in our description. Second, they offer medical school student loan refinancing. Perhaps you're studying to become a doctor. By the time you graduate from medical school, you'll have racked up $200,000 in educational debt on average. Sure, you'll have high earning potential and a stable job prospect, but that kind of debt is a tough pill to swallow, especially during residency when you're not earning that much. But you have to start making payments on your debt. In the past, medical professionals often had to struggle through residency before finding refinancing options. Today, medical residents and medical students have a myriad of low-cost refinancing options, including Splash Financial, a company that was founded by medical professionals. If you're in medical school, residency, or just starting your career, refinancing your loans with Splash Financial could be a smart move. It offers reduced payments of $100 during training and for 6 months after, for a total of 84 months. However, Splash Financial isn't the only company offering this perk. Laurel Road or SoFi and other upstarts are also offering this option. So be sure to compare rates before you commit to any company in particular. Here at The College Investor, we are partners with Splash Financial, and you can get a $500 bonus when you refinance over $50,000 with them. Look for that link in our description. So, how does Splash Financial compare to some of those other ones? Well, this is always the important question, because when you're shopping to refinance your student loans, we're firm believers that you should always shop around. It's why we recommend everyone use a comparison tool like Credible to see what the best loans are that you might qualify for. With that being said, here's how Splash compares to ELFI and Laurel Road, two other companies that offer strong refinancing options for student loans. As you can see, Splash Financial definitely stands out, but ELFI and Laurel Road are strong contenders too. Remember, you can always find our picks for the best student loan refinancing lenders on our website. Let's talk about what borrower protections are available through Splash Financial. Refinancing your loans to Splash Financial means you can't qualify for income-driven repayment or public student loan forgiveness, which is an option for medical professionals working at nonprofit hospitals. But Splash offers some peace of mind for medical residents by offering up to 84 months of deferment with low $100 payments. Forbearance and death or disability discharge may be available depending on the financing partner, but it's not guaranteed. Be sure to check with your loan agreement to be certain. So, who qualifies to apply with Splash Financial. You must be a graduate of a Title IV accredited institution to apply for refinancing with Splash. However, while many private student loan lenders require at least a bachelor's degree, Splash says that an associate's degree may be eligible to refinance as well. To qualify, the associate degree must be in one of the following fields: cardiovascular technologist, or CVT, dental hygiene, diagnostic medical sonography, EMT paramedics, nuclear technician, nursing, occupational therapy assistant, pharmacy technician, physical therapy assistant, radiation therapy, radiological MRI technologist, respiratory therapy, and surgical technologist. Parents are eligible to refinance Parent Plus loans as long as their child earned their degree. Minimum credit score requirements will vary by lender. Keep in mind that PenFed only offers student loan refinancing to its members. Thankfully, non-members can view their PenFed pre-qualified rates. But if you happen to receive an offer from the credit union that you like, you'll need to join before you can move forward with your full loan application. Let's talk about fees. Splash Financial says that none of its partners charge origination fees or prepayment penalties, but most lenders do charge late fees and/or returned check fees. To find out whether these fees apply and how they're calculated, check with the lender that'll be servicing your loan. How about safety and security with Splash Financial? Well, Splash Financial says its servicers adhere to industry standard security measures. Its site is also SSL encrypted and verified. To learn more about how Splash Financial uses your personal information and how long your data is kept on its servers, you can review its online privacy policy page. In the end, is Splash Financial worth it? Well, medical student debt can be overwhelming and expensive. Splash Financial can make it easier to handle during your training. The company offers decent rates and amazing terms. If you're struggling with medical education debt, Splash Financial is worth a look. But be sure to compare the terms and conditions with other lenders before you decide. Thanks for hanging out today, everyone. This is Andy from The College Investor. We'll see you in the next video.